Why did the investor bring his umbrella? Because he wanted to keep his stocks dry. A little humor to kick us off as we delve into the world of dollar cost averaging. It's a strategy that savvy investors use to build wealth over time. And why, you might ask, is it as crucial as carrying an umbrella in a downpour? Well, it's because it helps protect your hard-earned money against the volatile ups and downs of the market. Stay tuned to understand how not to get wet in the investment rain. Now, what exactly is dollar cost averaging? No, it's not a fancy math equation. Let's dive into it. Dollar cost averaging is an investment strategy, but it doesn't require a Wall Street brain to understand. You simply commit to investing a fixed amount of money in a particular investment at regular intervals regardless of the price. Sounds pretty straightforward, doesn't it? Imagine it like this. You're buying a delicious apple every week. Some weeks that apple costs $1, other weeks it might be $2. But you're not swayed by the price tag, you just keep buying your apple every week because you love apples. In the world of investing, this translates to buying shares of a particular investment. When the prices are low, your fixed investment amount buys you more shares. And when prices are high, you get fewer shares. The beauty of this strategy is that it smooths out the impact of market volatility. Instead of trying to time the market or predict the highs and lows, which is about as easy as predicting next week's lottery numbers, you're steadily building your investment over time. This method is particularly useful for those who want to invest but might be nervous about jumping in when prices seem high. It's a way of dipping your toes in the water without diving headfirst into the deep end. So it's like buying more ice cream when it's on sale and less when it's not. Smart, right? Scene script. Why would anyone want to do dollar cost averaging? Well, there are a few good reasons. Firstly, dollar cost averaging is like having a superpower that reduces the impact of market volatility. Can you imagine that? It's like having a shield that absorbs the shocks of market ups and downs. This strategy involves investing a fixed amount regularly, regardless of the price fluctuations. So when prices are high, you buy fewer shares, and when prices are low, you buy more. This way, you're not trying to time the market or predict its movements. Instead, you're focusing on a long-term strategy that smooths out the market's peaks and valleys. Secondly, dollar cost averaging helps you to remove emotional investing from the equation. It's all too easy to let fear or greed drive our investment decisions. We might panic when prices drop or get overly excited when they rise. But with dollar cost averaging, you're sticking to a regular investment schedule, which can help keep those emotions in check. Lastly, for those dipping their toes into the investing world, dollar cost averaging offers a more manageable approach. Instead of trying to figure out the best time to invest a lump sum, you can start with smaller, regular investments. This way you can get comfortable with investing and learn as you go. Imagine it as a roller coaster ride, but with dollar cost averaging, you get a seatbelt. Okay, quick recap time. Dollar cost averaging. It's like your financial raincoat, shielding you from the unpredictable downpours of the investment world. But how does it work again? Let's jog our memory. Think of it as a strategy, a game plan, where you invest a fixed amount of money into a specific asset at regular intervals, regardless of the price. It's like buying groceries every week, whether apples are cheap or pricey, you still get your apples. By doing this, you're spreading out your investment over time, reducing the impact of short-term volatility. When the price is low, you scoop up more shares, and when it's high, you get fewer. It's a bit like having a seesaw in your portfolio, balancing out the highs and lows. And remember the benefits, they're pretty sweet. Dollar cost averaging can help reduce the risk of making a large investment at the wrong time. It's like having a safety net, catching you when the market takes a tumble. Plus, it can also help you build a substantial investment over time without feeling the pinch. And there you have it, folks. Dollar cost averaging, your personal umbrella in the unpredictable weather of investing. If you found this video helpful, give it a like, and don't forget to subscribe for more investment tips and tricks. Keep your stocks dry, folks.